Welcome back to Investing with Confidence. As always, I am your host, Joshua David, and we have a special show here for you today. We're talking about these great markets we're having. We're seeing some great volatility. Markets down at one point, about, we'll say 14% from their highs. And this all has happened this year. So people that have retirement accounts and money in the market that just is an up strategy are not feeling so good. And that's what we're going to continue to discuss here on the second segment of Investing with Confidence. By the way, sponsored by Online Trading Academy, teaching people just like you how to trade and invest in the stock market within 401ks, IRAs, or just regular trading accounts. If you happen to miss 2 tickets for the free investing class that we do right here in Bloomington, they're 2 hours. Al teaches these and talks about how the markets work and opportunities in multiple directions in the stock market. Just call 888-682-6466. That's 888-682-6466, or text the word INVEST to the number 484848. You're going to receive a financial quick start kit to do just by getting set up that includes some free stock picks. So, Al, we ended that last segment talking about we want to get into things you can do or investors can do in down markets. And I just want to kind of reiterate something that you were kind of alluding to in the last segment. When things are looking bad in the markets, when things are looking volatile, people do nothing. They put their head in the sand and they just watch their accounts go lower and lower and lower. What are some of the things you can do when markets are volatile and they start to go down?
Well, you mentioned people do nothing. The reason that they do nothing is that that's what they're told by their financial advisors. If they have an advisor, or if you're watching some of the pundits on TV, they're going to say, don't panic, just hold on, because you're in this for the long term. You know what? Maybe you're not in it for the long term. Maybe you need some additional cash now, or maybe you're retired. Maybe you're 75 or 80, and long term, the definition of a long term has changed.
Yeah, you're not buying green bananas anymore.
That's correct. So the sad thing, Josh, is that the opportunities to take advantage of a market, no matter what it's doing, are there. They're available to the public. But most of the public either doesn't know how to access that information, they're not getting it from their advisors. And think about it, when you're entering into a trade or exiting a trade, there's always somebody on the opposite side of that trade. Oftentimes, it is an institution because they control probably 90% of the trading activity out there. So if you think that you're going to trade against a Goldman Sachs or a hedge fund manager and be successful, you might want to rethink that. But the point is, you can trade with them. You can trade right along with them. And one of the things that we have really built into our core strategy is the ability to really kind of follow what the institutions are doing. So you're thinking, you're acting, and you're executing like a professional and not like an amateur.
Yeah, I'm glad you brought that up. But what does that really mean? I mean, we want to trade with the smart money. We can't see where they're buying and selling. We can't see their orders. But how do you see that on a price chart?
Yeah, actually, what we are doing is kind of we're hunting unfilled orders.
Okay,
we're looking for something that hasn't happened yet that has a high probability of happening. And that's what our core strategy, it was really put together by guys that worked on Wall Street that were actually the people that were moving the price of things. Yep. So the core strategy really helps you to identify where institutional trading activity is going to be taking place, and that gets down to that supply and demand zone that we're talking about. Yeah. A lot of people might come into a class somewhere or look at something online and think, well, there's all sorts of zones here. I can identify those easily. And there are, but they're not all high probability quality zones. And that's really what we're looking for. It's not quantity, it's quality of what you do. Yep. And what you really should strive for is a position that you get into where you have the lowest risk entry with the highest profit potential and the highest probability of it succeeding.
Yeah.
Too many people function on their opinions, what they think will happen, that they have a gut feeling about something, or think this is right. This is what's going to happen when something happens over here. Something is going to happen here. It doesn't make any difference what we think. The market's going to do what it's going to do, but there are things that we see that happen during certain situations that we can concentrate on. We're helping our students put the probabilities of being right in their favor but also having the proper risk management. So when you are wrong, and let's be honest, nobody's going to be right 100% of the time. So if you're wrong, have it be such a small loss that it really doesn't impact you, but just make sure when you're right, you're really right.
Yeah, and for instance, we had talked about a supply zone back actually several times that we've been talking about that was created back in May of 2020, which is where we were identifying sellers.
Right.
We've been talking about this for several weeks now, and it did come back in there, and it respected that zone. But you're talking about proper risk management. There was roughly a 4-to-1 win risk ratio. So basically, you know, if you're wrong, you lose one. When investors are right, they make 4. So that's how proper risk management comes into play. Now, here's the interesting thing: prices back up near the top of that zone, which basically means those orders have been filled. And what typically drives and what really has an impact on the stock market is the U.S. dollar. If this continues to break this zone, who knows where the market's going? That's why it's so important, as what you're talking about, to protect what you have and learn the skills and techniques to identify where the institutions could potentially be buying and selling and trade like them. Al, you actually teach these investing classes and right here in Bloomington and explain that in more detail. What it looks like, how the market functions, how supply and demand works in the markets, but also how to have the odds in your favor in your investment decisions. So I want to give away 20 tickets for this investing class for callers 1 through 10. When you call in right now, you're going to receive 2 tickets plus a financial quick start kit that includes some free stock picks. Just call 888-682-6466. That's 888-682-6466. You can also text the word invest to the number 484848. So, Al, with these markets that are very volatile, that's what we want in trading and investing. You mentioned the core strategy. It's actually designed to embrace volatility. So we have a lot of listeners that probably want income strategies. How do investors have income strategies in these volatile markets, but do that with consistency and more confidence as well?
Well, that word consistency is really important because that's what will make you successful over time, is being able to do something on a consistent basis. But, of course, it has to be something that works, and that's where a proper education comes in. Understand how the markets function, what makes price move, why does price move? And we see a period of time where maybe the market is going down, and then there are periods of time during that downtrend where all of a sudden it reverses and goes up. Or it can be in an uptrend and reverses and goes down. And there can be companies that are great companies out there that all of a sudden they've reached maybe a high valuation, and all of a sudden that turns and goes the opposite direction.
We've been talking about a lot of those companies: PayPal, Google, Facebook.
Right.
Or Meta. These companies they've hit peaks,
absolutely,
and they've hit drops. So, but there's opportunities there for up and down markets.
Yeah, and that's the point, is not to just hope that something happens or think that something happens because you think it's the right thing for it to do. Look at what the institutions are doing, because they know what the true value of something is. They know when something is really overvalued, when they should maybe take some profits, and the stock may be in a good strong uptrend, and you think it's going to continue, and all of a sudden it doesn't. It's because the institutions decided it's overvalued now, and I want to take some profits. So wouldn't it be more important to be able to identify where they're going to be trading, where they're going to be trading if they're buying, where they're going to be trading if they're selling, so you have the opportunity to participate at that same point? We show you how to identify that on a price chart.
So 2 questions, Al. You said hope isn't a strategy. Isn't that amazing? A lot of people get in their investments and, I hope it goes up. That's why when you have a strategy and basically just rules to follow in that, it's not a hope strategy. It's a probability strategy. And you also said opinions don't move the market. Well, that is true, but facts move the market, which facts is price charts and price activity, which is done by the institutions.
Yeah.
And that's what we're identifying within supply and demand zones.
Yeah. Let me retract that a little bit when I said opinions don't move the market. The institutions start the move, and then the public's opinion enters into it, and they emotionally start to enter or exit a position late to the party. And that's what a lot of those indicators that the public is using.
You have RSI, all these crazy indicators that you can get on free platforms, right?
Correct.
Well, those are all lagging indicators, and that's a lot of the reasons why the public is late to the party.
Yeah, and what Josh means by lagging indicators is that wherever you see the price, wherever it is right now, those indicators are lagging. So they don't really, it's really like taking a step backwards. What we're doing is we're looking forward at where with a high probability an institution is going to take a position or get out of a position. And really, it just comes down to, number one, being able to identify repeatable patterns, something that happens on a reliable basis repeatedly, and then knowing how to take advantage of it. And let's keep it simple. Really simplify things, because the only real important thing to know is when price is going to change or move significantly, and how far is it going to go.
Yep.
And that how far is going to go, that's your profit. But always do that with a risk strategy that's going to keep you from getting in trouble, like what happened to a lot of people in 2008, in 2000, and this last week.
Correct. Yeah. So real quick here, we'll talk about it more in the next segment, but I want to kind of give a little teaser to our listeners about income strategies. Now, income strategy with stocks are, it's expensive to do. How does somebody utilize a different market, maybe the options market, hint, to utilize different income strategies with that?
Yep. Well, there are strategies that the big players use that you can use that they're really just not telling you about. They're not teaching you about them. Options is one. If you need income, which really means that you need something in a short period of time. Maybe for some people, maybe it's weekly. For some people, monthly. Some people, daily. It means something other than that long-term buy and hold, buy and hope strategy. And there are assets that you can trade. Options, for example. You can trade options on a short-term basis. Mid-term, you can use them long-term. Futures, the futures market, very great, really good short-term trading vehicle. The foreign exchange market also has some versatility there, short-term, long-term. And all of those assets I just mentioned also have leverage, which simply means you're being more capital efficient. In other words, every dollar that you have in an account can control maybe $10 to $100 to $200 worth of an investment. That's wise use of your money. That's really, getting good productivity out of every dollar.
Yeah, we've been talking a little bit about strategies for up and down markets. I just want to clarify the down market. It's called shorting, okay? And I was mentioning earlier, I had a conversation with a good friend at the gym the other day. And, and regular investors, the public is buy and hope it goes up with really no plan to take their profits, right? Mm-hmm. So we were talking about shorting a little bit. And then I was trying to explain that it's a strategy for down markets. And they say, well, couldn't you lose? Isn't there a lot of risk with that? I said, well, if you protect your positions, it doesn't matter because it'll automatically get you out with low risk, high reward, high probability entry points. So most people are in a one-directional strategy, right, which is up. Well, now, hopefully our listeners know, now there's two strategies, up and down, but now you have to learn the skills on how to do that.
Right.
And you talk about that in these investing classes, these different strategies for up and down markets, how the markets work. But here's the key in these classes. Al, you really talk a lot about how to improve investing performance or have the opportunity to do that. You have to discover the techniques that professionals use and then learn the skills on how to do that. And that will help people sleep better at night, because if people have 401ks, IRAs right now, I am sure they are not sleeping well right now. But don't just stay the course. In it for the long haul. You know what? Now is the time to take charge in your finances. Don't let somebody else dictate your future. Typically it's a friend of another friend of another friend that lives down by the river.
Right.
Do this yourself and have the confidence to do that, but you have to get started. Investing classes is where it starts. Online Trading Academy, actually on their 25th year, teaching people just like you how to get started in the financial markets. Call 888-682 for 888-682-6466 for 2 tickets for the investing class right here in Bloomington. That's 888-682-6466. These classes are free. Al teaches these. When you come in, you're also going to receive some free stock picks in the Financial Quick Start Kit. That'll actually help you get started right away. Alec, I do want to continue talking about these great volatile markets. Oil has soared over 100. Mm-hmm. Gold has soared. Silver has been going up, and PayPal in a demand zone. Coming up next.
segment are we going into?